Good afternoon, everyone, and welcome to today's webinar. My name is Seema Menon, and I'm the Vice President at IMA India, which is a leading business information services company offering high quality and comprehensive CXO peer group networks. And we have close to 2,500 multinational, domestic, large, and mid-sized enterprises as our clients. We are excited to partner with Vienna, which is a leading trade credit infrastructure services company, and we've curated this exclusive interaction for you. So this is the second in the series that we're doing with Vienna, and this time around, we will explore how CFOs can reimagine the role of data, moving beyond dashboards to decision-making, beyond reports to foresight. I think in today's world, there is no lack of data. It is everywhere, it is vast, it is fragmented, and it's multiplying by the second. And for CFOs, the real challenge isn't access to information. It is making sense of it, shaping it into intelligence that drives resilience, efficiency, and growth. So those are some of the things that we will talk about in today's discussion. More importantly, like I said, it's not about managing data, but it is about unlocking the power of intelligence to shape the growth agenda. So thank you once again for joining in today. So with that, we will move into today's session. A couple of housekeeping announcements before we get started. So if you have any questions, please type them into the Q&A window. You will see this at the bottom of your screen. So please type it in there and we will take it up perhaps if we have time during the course of the interaction, or we have parked some time for Q&A at the end. And we will also run a couple of polls. So you see this poll window here that is depicted. So once the polls are alive, the window will look like this. So please key in your responses because they're very critical for us to get your perspectives on some of these areas. And I think it will also add a lot of value to what the panelists will talk about. And we are absolutely excited to have with us three leading business leaders. We have two CFOs, Nipun Bansal, who heads the finance for Hughes Communication India, Nilay Rathi, who looks at finance at the Aditya Birla Group, and Mohan Ramaswamy, who heads Rubik's Data Sciences in India. So absolutely a cracker set of panel, and feel free to ask questions, etc. And we've given them some sense of what we would like this conversation to develop into. So without further ado, let's get started. Nipun and Nilay, may I just request you all both to come on camera as well? So we will start with our first poll question. And I am just going to bring it up onto the screen. Please key in your responses. We have about 30 seconds. So on an average, how much of your finance team's time is spent just gathering and reconciling data versus analyzing it? Very interesting. Okay, so I will end the poll here and I will share the results. So very interesting, about 40 to 60% have said that they spend 40 to 60% of the time on gathering and reconciling data versus analyzing it. Mohan, is this also what you hear your clients say? You're on mute, Mohan.
Sorry, more or less, yes, Seema.
Does this resonate with what your
Between
clients say?
40 on an average, between 40 to 50, around 40%, 40 to 50% is what we get to hear.
Okay.
We work with 2,000 plus corporates, so I can confidently tell you that this is what is what we see.
And Nipun and Nilay, is that Uh, is that an accurate or a fair
Yeah, this resonates
input?
very well. I was expecting 40 to 60 to be around 50, and that's exactly how the polls that came in.
Right.
Because being the finance team, I think most of the time we spend more in the data gathering
Hmm.
rather than the data analysis, and that's an area which, if you ask me honestly, I am at least working upon that. I need people not working with hands but working more with the minds, which means I want them to do more analysis rather than the data gathering or data collection.
Reconciliation.
So,
Yes.
In
Nilay?
case of poll, I also to put this 40 to 60% range, because in my organization also I think a lot of time goes on data identifying only.
Sure, sure. Okay, so I think, then we have a consensus on this one. So moving ahead, we have another quick poll coming up. This is so that, we are able to set the context appropriately and and move ahead in the conversation. Okay, the second poll is active, which talks about which non-financial indicator has surprised you most with its ability to predict financial outcomes. Are you all able to see the poll? Okay, interesting. Okay, I've started to get responses. Okay, and let me just share the results. About 63% say that customer sentiment is a non-financial indicator. About 25% say supply chain disruptions and 13% say ESG. Again, like a quick dipstick from our panelists as well. Nipun, will go with you
Yeah,
first.
see, customer is king. That has been a statement which we've been hearing for quite a number of years together.
Right.
And it is his sentiment which is actually driving all the financial indicators. Because if anything goes wrong in terms of the customer satisfaction or any incorrect delivery,
Hmm.
if the customer is annoyed, your business is gone. So customer is prime, and I very well agree with the people who put in a 63%. I would have been more glad if it was like 75% on a customer sentiment.
Right. But tell me something, Nipun. Is this true for companies that are in the B2C space specifically, or do you also say that this is relevant for the B2B space? I mean, this being the single
This
most
is, see,
indicator.
any B2B or B2C, customer is customer at the end of the
Hmm.
day. So you just can't distinguish between the customer in a B2B to B2C. B2C has a larger customer base, but with a lower turnout. But in a B2B, one customer goes, you do not know
Hmm.
how much percentage of the business you are losing. So
Sure.
B2B, it becomes all the more very critical and important. Though I also lay a little more stress on the employee engagement, because that's also one of the key parameters. No one even did 1% to it, but then
Hmm.
to me that's an equal I would not say equal, but that then also carries a little weight, because it is those employees who are delivering this customer satisfaction.
Experience. Yeah. Yeah.
Yeah, so that they enjoy an equal and other factors, yes, I respect, they still stay there.
Sure. And also, Nipun, another input would be that would the percentages vary depending on the sectors that you operate in? So I can understand customer sentiment prime across all
Yes,
sectors, but
yes,
the
yes.
others, is there a
Yes,
variance
yes,
that you
it
would
can
say?
vary from sector to sector. See, it cannot be very specific. One answer cannot be specific.
Yeah.
One rule will not fit all. There will be certain variations around. Say, if you're talking of a GCC, the employee turnout or employee turnover or attrition will be, assume a lot of importance things. So,
Hmm.
I'm just giving an example because
No,
it was
no,
a
fair enough.
0% here. So,
Yeah.
if it varies from an industry to industry, definitely the percentages would differ. But yes, customer would be the prime thing. It would always have a higher weightage. The other below factors, and if it is only a supply company or a manufacturing company, the supply chain would assume a higher percentage than a customer satisfaction.
Correct.
So it would definitely vary from company to company. So you're right in that way.
Sure, sure. Nilay, quick comments on this?
So I have some of the things I'm agreeing to Nipun, because as per me, happy employee is like most important factor, because employee is the front face for any organizations, and he demonstrate the company success or whatever is there to outside world. Maybe customer also he is dealing, and any type of ESG, sustainability, all non-financial metrics, he is only dealing with all the things. So I think as per me, if you ask, employee is the most important factor, because if a happy employee is there, he will deal with all these type of challenges, and sense of ownership what employee brings to the organization, that can demonstrate the company success. That is my view. It's maybe definitely all things are very important, because if sentiment is negative, your product is not good, then also employee becomes part of that. Supply chain disruptions, they come with a lot of inputs for making it success. So in that way,
Yeah, yeah. Mohan,
as
as
for me,
somebody leading the business,
Yeah.
leading a
yes.
business, does this resonate, or are there other non-financial indicators that you think will have a larger weightage?
Yeah, so I'll give you a slightly different perspective, different from what both Nipun and Nilay mentioned.
Hmm.
And I sit on the other side where at Rubik's we work with corporates, at least about 2,000 of them,
Hmm.
where we help them assess the counterparty risk either on the supply chain front or on the customer front before they decide to extend credit and so on and so forth. And this is part of the assessment process where we look at a host of financial and non-financial indicators that help us ascertain the overall predictability of what is likely to happen with our customers or suppliers, as the case may be. And I have seen that it is always a combination of all of these factors that you've displayed in the poll and many more,
Hmm.
which has a significant impact on the overall sort of outcome with respect to what is likely to happen with that entity, right? So, and which is what, which is why when we assess or when we analyze a company, we look at almost about 150 sources for information. It is not enough if you were to look only at financials or some of the non-financial aspects when you analyze a company, right? Because you are investing your time, energy, and money into the arrangement that you're looking at having with the counterparty, be it a supplier or a customer. So you have to look at a host of factors that will help you ascertain what is likely to happen with them. Is your the business that you expect to do with them likely to be good, where you get your money on time, or
Hmm.
is your engagement with the supplier is it
Hmm.
going to be good enough that you can invest more into that supplier? So you have to look at a variety of things before you conclude on what's likely to happen. Slightly long response, but I had to give
No,
you with
very
that
interesting,
context.
very interesting. Because I think, as CFOs and finance leaders, looking at the data and those aspects are very critical. But it's also important to look at some of these non-finance indicators that have a large bearing on the business. So moving on with Nipun, you when the first poll came, you said that about 50% is the amount of time that you would spend in terms of gathering data, reconciling it, and things like that, right? And we also know, when we speak to a lot of organizations, that finance teams are often buried in manual data consolidation from many systems. So each organization today, big or small, has multiple systems that they work on. So there is a CRM tool, there is like a Tally and other sophisticated packages and ERPs that you have. Plus there are other tools that marketing and everybody works with, right? So there are multiple tools within the organization. So one of the biggest challenges that I see every CFO talking about is really consolidating all of that data and bringing it onto one site so that you can gather the kind of intelligence. So in your organization, Nipun, what are some of the steps that you have taken to sort of ease this process?
Yeah, I can talk from the previous experience. Now, currently, we are kind of settled. So,
Okay.
one example maybe that helps you understand. First thing I want to say is that the critical step is not jumping into the technology. The
Mm-hmm.
statement I use is there has to be one version of the truth which sits into the system. So,
Correct.
mark my words, one version of the truth, and that's where I That's where I actually target upon. And
Right.
giving you an example, there in the business there was a problem which was very real. So since we work into a satellite communication company, so bandwidth utilization sat into the network systems.
Mm,
The billing was in our accounting system, which is SAP.
mm,
The customer contracts were in the sales system, and the inventory was being tracked in the Excel. So imagine there are four systems which were at one point in time using. But
mm,
then for a finance guy or for a CFO team to do a month end consolidation, getting up the data from all the four sources became a little challenge. So
right.
thanks to the team and thanks to bringing all the people together, first thing was how do we bring in the revenue recognition challenge? First was that because
Yeah.
the sales team very contracted, very rightly said, or very not rightly said, but they said that any contracted bandwidth, which means whatever they've got the contract will be part of the revenue. But finance being finance, we said no, whatever has been billed usage is something, which means whatever you used will be consumed or consumed, marrying the cost revenue principle is the revenue. So we brought everybody onto the one single page. So
Mm,
the foundation, so that set the foundation for everyone. So we have now a in-house developed app which takes care of all these three to four things. It talks to SAP, and there is a constant data exchange which
mm,
happens between these two systems. So what has happened because of this is that my billing, my revenue recognition, my reporting through the system, all of them have gone now very streamlined.
mm,
I would say if I see, I get almost 2 to 3 advantages out of it. My closing cycle, which was about 10, 12 days, has come down to 3 to 4 days because those reconciliations have gone. My
mm,
customer profitability reports, which were scattered at all places, is very easy on a click of a button. Since now the two systems are talking, the data is into this system, it comes out easily. And since
mm.
we sit into the management, the dispute while we were reviewing those dashboards or the numbers, the question was whose data is correct. Now,
Yeah.
rather than questioning whose data is correct, we question that what are the insights and we take an informed decision. So if I say it was not a dashboard, something which I said earlier, but it was a one version of truth. So that's how you consolidate and bring in. So mark my words, one version of truth is what I call it.
No, absolutely, Nipun. I think that is very, very critical because today, like I said, as complexities grow, data rests in different systems. And, like you rightly said, the tussle is always between the sales and the finance team saying that my data shows this, whereas the finance says that, it is on revenue realization and so on and so forth. So I think those kind of conflicts can be avoided when you're talking about one version of the truth. So everybody has the similar instance of the data available with them. Moving on, Nilay, I think that was a very interesting input from Nipun. Um, Nilay, what is the most common data gap that you see, especially when we're talking about supply chains of mid to large enterprises, and how does bridging it directly impact on CFO's key metrics like working capital days and so on and so forth? We can't hear you,
Nile,
Nilay.
you are on mute, I believe. No, we can't hear you. No, still can't hear you. Nile, we
Are you
can't
on
hear
mute?
you. Some challenge, some technical challenge. You don't seem to be on mute, but
Now you are getting my voice?
yes,
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 Right.
yes,
loud and
loud
clear.
and clear. Thank you.
Yeah, yeah. So I think data is required at each stage of production, right from inbound of goods to output of outbound of deliveries, till the time we get collection of funds. But from textile perspective, I will definitely tell it is a very complex production process. Input is one, and output is multiple. Maybe you see shirting, trousers, fancy finer, bed sheets, etc. And the production process also from cotton to yarn to gray fabric to processed fabric, and these all have different production processes. So sometimes it goes for multiple reprocesses in one machine, and sometimes it skips one machines. So
Mm,
data, if not proactively planned, it may lead to either excess stock, or sometimes it may happens that you have to stop your machines in between. Hence, definitely very important data gap is we have to maintain on the basis of order sheet. Data library has to be maintained. Reverse planning is required to be done from right from till raw material to finished goods. When you get the order, you have to do reverse planning, minutely identifying each stage of production of the material. And add-on required, what are the all materials required at different stages. This all requires historical data, which can tell the productivity and machine speeds, whatever materials are required, dyes, chemical, etc., to produce the requisite product. If the data material code is available in data library, the same will help in advance to know the material required at each stage, which helps in smooth running of the machine with optimum working capital. So your machines are also continuously running, and your working capital also cycle has been reduced. Hence, as per me, if you say what is the important data gap, it is data library of different material codes. That is my take on that, in at least in textile manufacturing industry.
Sure, sure. Nipun, you want to add to that?
No, I think he said it very correctly that something which happens here in a data gap. I I could maybe point out on a cash conversion cycle, something where we all know how our DIOs or the inventory days are there, or how it impacts our cash conversion cycle. So, if these data gaps are not addressed at the right time, so cash to me becomes very critical beyond a point, or a cash
Right.
conversion cycle which is very critical. So these uh, uh, how would so these supply chain gaps. So as I say, from receivables to payables to DIO would actually impact a cash conversion cycle. So I more look from a CFO point of view, wearing the
Correct.
finance hat, because that's the kind of experience we talk about. So those data gaps step in there.
Yeah, yeah. So at this point, let me just, go back to a quick poll where we will try and get the audience perspective also on this. So our third poll is live. So where do you face the biggest blind spot in your supply chain data today? I think this is critical because a very interesting survey a couple of days ago with the CFO community, especially in the manufacturing space, talked about supply chain being one of their biggest reasons for worry. Given everything that's happening in the geopolitical environment, right? And also things not stabilizing post COVID as one may like it. I think this becomes one of the biggest challenges that organizations are today saying. So very interesting. I think we're getting some interesting insights as well. Yeah, I'll quickly end the poll and maybe share the results. Okay, the biggest blind spot in your supply chain data today is inventory levels and demand forecasting. Second is supplier health and performance visibility, and 10% say logistics, tracking, and costs. Does this resonate well with all three of you? I mean, is this something that you see, in and around you as one of the biggest challenges?
Yeah, if you allow me to speak,
Yes,
inventory
please,
levels
Nipun.
are the one which bothers any organization.
Hmm.
It could be me or even Nile's
Yeah,
organization, which is manufacturing specific. And there we always run a risk of inventory getting obsolete. I work for a technology company, so for me, an optimized inventory level aligned with the customer demand becomes very important and critical. And in the
sure.
technology kind of an industry where obsolescence happens very quickly with
Hmm.
the advent of the new technology, so the demand and inventory levels have to be at the utmost priority. So that's my take on it, and I agree to what 70% of the people here are saying too, because I at least come from an industry which is needed. Maybe Nile can comment further.
Sure.
Nile, again, we can't hear you. Nile, we can't hear you. No, we can't.
Can't hear
So
you, can't hear you.
maybe while he fixes his audio,
Huh.
maybe I let me
Yeah,
give a
Mohan,
different
please go on.
perspective. I'm sure Nilay will also agree to what Nipun said, given that I mean this is what typically an organization would encounter. But when you look at the other side, when we talk to companies in helping them understand their customers or suppliers better, so that they can end up taking the right decisions around the business they want to transact with them. We've come across enough and more situations where our customers don't have full view of the overall health of their suppliers. We are seeing increasing cases where a lot of even big business houses want to assess their entire supplier base to understand the overall health of the suppliers, what is the extent of business they can transact, who are the ones who are reliable and who can continue to be reliable in the future, right? So, from an outside in standpoint, I would give, I mean, an equal weightage, if not more, to understanding or knowing the supplier's overall health, so that you can confidently take decisions on working with the right set of suppliers, because it's becoming extremely important. I remember the days where the CFO fraternity used to be largely concerned about the customers. If it's a distribution-led business, dealer distributors, who's credit worthy, who's not, kisko kitna credit de sakte hai, so on and so forth. But suppliers are becoming even more important in today's times, where you are betting so much on your suppliers, be it in India or overseas. So you need to have a continuous view of their overall health and whether it is changing for the better or for the worse, so that you can moderate your decision accordingly. So that's
Uh,
my view, which I sense is slightly different from what Nipun and perhaps Nilay
yeah, I think
would
Nilay
say.
will get you to
Uh,
comment, but in the meanwhile, I've just put up a copy again because one of the options was sort of repeated. So it is basically inventory levels and demand forecasting, supplier health and performance visibility, working capital impacts, and logistics tracking and cost. So may I just request you all to just key in your responses, and Nilay, we'll get going with your response.
Yeah, I truly resonate with what audience have said and Nipun also had said, because in my last reply I also have said that inventory levels and demand forecasting is very important,
Hmm.
because once we have the demand forecasting, then only we can reduce our working capital cycle. We know how we can use the machine, how we can reduce the cycle of inventory. Because
Hmm.
unless and until we have a demand in our hand, we don't know how we can reduce the cycle. It may machines may stop in between, or we have a excess inventory at any stages.
Hmm.
So I think then also it comes inventory level and demand forecasting is very important. Because whatever the inventory levels are there, if it goes below level safety zone, then also it's a risky, or if it is
Yeah.
above and become absolute, then also it's like cash might get blocked in that. And demand forecasting leads us to the proper utilization, optimum utilizations of machine, as well as my working capital is also maintained. So I
Hmm.
truly resonate with all the audience and Nipun whatever has been said.
Yeah, I think about 10% have now keyed in that working capital impacts, is one of the blind spots that feature in the supply chain data today. And Nilay, like you rightly said, if you can't forecast what is going to be your demand, it's going to have an impact on your working capital as well, right? So, and I
Correct.
think that also resonates with what Mohan said that he sees in the client ecosystem as
Yeah.
well. So, Mohan, we'll just move on to the next poll as well because that will segue into our conversation moving ahead. So I'm just going to launch the fourth poll. And this is around how confident are you in your organization's readiness to adopt AI and predictive analytics in finance? I think AI is a hot button topic. Every organization is looking at integrating AI into their workflows, into their processes as well. Again, left to be seen how successful, and as I understand that it's a work in progress. So organizations are looking at how do they firstly streamline their processes and then look at an AI intervention. Okay, this is interesting because we have, around 6% of the organizations which say that they're already adopting it very successfully, 44% piloting but early stages, interested but not started. I think, this 44% on each actually stands true with most organizations that we talk to. Either they've piloted or they're quite interested but, have still not taken the plunge, and about 6% say that concerned about risks, not confident yet. I remember we had a very fascinating conversation around AI adoption just last week at one of our conferences. And again, I will go back to first Mohan. Mohan, is this something that you're seeing in your client ecosystem as well?
Yeah, so we are clearly seeing that, I remember times where our customers were interested in worrying only about, let's say, the top 20-30% of their portfolio or customers that gave them 60-70% of their overall business. But clearly that situation has changed maybe after the pandemic or, post which we saw the supply chain risk shoot off the roof. Ever since we've seen that companies are interested in knowing the risks that they are faced with whether it is compliance risk or supply chain or distribution chain risk, and what they need to be doing so that they can mitigate the risk confidently. We are also seeing another change, especially in the CFO fraternity, where earlier it used to be more around risk mitigation, but now we are clearly seeing a trend emerge where it is not just mitigating the risk that they are concerned about, but they also want to grow their business profitably. And so they are, subscribing to tools like ours, where on one side it helps them mitigate the risk and understand the suppliers and customers better, or maybe even undertake KYC checks so that they end up working with the right counterparty. But on the other, they also want to do this exercise because they can bet bigger with credit-worthy customers so that they can grow their business, or healthy customers so that they can further strengthen their their business arrangements with those suppliers. So we are beginning to see a trend emerge where this is gaining incredible importance. I mean, in a matter of 8 years, if you're working with 2,000 plus corporate customers, virtually all banks in India and all the insurers, it goes to say a lot about not just the platform that we've built, which is helping them take decisions with a fair bit of confidence, but it also talks about how open the customers are becoming with respect to wanting to know the risks and take the right decision so that they can grow their business profitably.
So, Nipun, coming back to AI, I think, it's a no-brainer. I think organizations will need to adopt it at some point in time. So, tell us a little bit about how you're looking at this whole AI landscape. What is it that you're doing? Have you experimented with it?
Good question, Seema. AI, artificial intelligence, not a human intelligence. So one thing we should be very clear about it, and it is becoming incredibly powerful along with the predictive analysis with the passage of time. But there are pitfalls and challenges on that, because the data governance or the truth of the correct data into it will result into the correct output. I was hearing someone and he said AI currently knows only 10% of what an organization does. If we as an individual, we know what is happening in our organization, the more we feed AI, the more data it throws out. But having said that, I would say it is not a magic box, but it is an extension of the current existing risk framework. And whatever predictive analysis tools which we use through the AI has to pass through a litmus test. I will classify it into three categories. One is the data hygiene, because whatever you feed into the tool, it will process that. And data hygiene, being the finance guy, we should understand that the ownership of the data, the correctness of the data, the audit trails of the data is very important. So the correctness of the data for it to generate a predictive outcome is very important. That's point number one. Point number two is the privacy and security. The data, what we handle from the finance or the SCM or the logistics point of view, is actually highly, highly sensitive. So you need to actually see what kind of access, what kind of controls, what kind of encryption do you actually need to give to those predictive analysis tools. Third is the human oversight. As I said, it is artificial intelligence and not the human intelligence. So it can only suggest, but it is people who decide. And I'll classify that what I am saying by certain examples. There human oversight, when I say, we did a capacity planning AI tool, which said in a certain region, the demand because of the bandwidth increase is gonna surge by 15%. But when we did a sanity check through our sales guys there, we actually found the demand surge is actually not 15%, it is in the range of 8 to 10%. So if we would have relied 100% on the AI, maybe we would have diverted our inventory there, we would have diverted our workforce to that area, and we would have at the end of the day sat with an inventory which would have not been sold, or a working capital getting stuck up there. Similarly, another tool which is a predictive analysis tool, what we do is when we give it to our sales teams, and now I'm talking of the privacy factor which I was talking, we actually take the customer's name out. They can see the trends, they can see the graphs, they can see what the whole data is coming behind that, and draw the trends analysis and certain decisions around on how the whole macro thing is developing, where they are going. So you have to actually work with a lot of filters. I said data hygiene, privacy, human oversight, and what very rightly said as an example. To summarize, I would say AI can be used as a co-pilot, but not an autopilot. So you cannot put everything on, because it is just at a stage where it is emerging. So just
Absolutely.
remember my word. I say it's a co-pilot, it's a supporting tool. Human intelligence still required, but not on an auto mode till now.
Right, right. I think one of the fundamentals, that everyone talks about when you're looking at AI is about the quality of data that gets inputted, because everything then depends on the quality of data that you have inputted, right? So you have to
Yes.
firstly, as human intelligence, ensure that the data that you have is sanitized, is correct, because all your analysis will depend on the input that you
Yes.
sort of provide, right? And
Yep.
Nipun, you re-emphasized on that point as well. Nilay, quick comments from you.
Very well said, Nipun. I think quality of data, relevancy of data, and the timely availability, all three are very important. And I agree with a lot of audience that today everyone is using AI and predictive analysis both, because predictive analysis, maybe we are predicting what are the supplier delays, timing, demand forecast, machine breakdown in between because of sensors or something. We can identify when preventive maintenance needs to be done, what is the customer default history, etc. And AI also, as Nipun had said, we also used to do a lot of exports to big brands, and there through scanning they identify the source of manufacturing, whether we have used the organic material or what other type of material, whether we are reusing, because on sustainability and all other things, these all things are required. But it comes with its own pitfalls, because the informations are so much available to the public that it can either be misused or may be of no use to them. So to avoid them, we have to work a lot on how no use of pen drives on mobile laptops, antivirus software, firewalls, and sensitive data, how we can encrypt those things, network, how we can segregate, and segmentations we can do. So these type of activities we have to do humans in the loop instead of fully dependent. That Nipun had highlighted very strongly. That is very much required, not to be fully dependent on machines, but human intervention should be there. A lot of other factors also we have taken into consideration. Seeing, I think a lot of output had come where employees have used those data not to the maybe detrimental to the organization. So organizations cannot, employee cannot paste data on WhatsApp, the dual authentication system while accessing your email at least at remote places, internet availability as per work requirements. So we have to put our own check systems. But without AI and predictive analytics, I think organizations, even not even big organizations, small and mid organizations also require these type of both these activities. That is my
No,
say on.
absolutely. Absolutely critical. Mohan, coming back to you, I think we started the conversation by saying that there is no dearth of data, right? And particularly when you're looking at supply chain, for instance, where you see that there is immense data flow across supply chains. In your experience, what is the low-hanging fruit for a CFO looking at using this network data to immediately improve their cash flow? So options like dynamic discounting, supply chain finance, or something else entirely. What do you think would be one of the areas that CFOs can immediately sort of look at?
Sure. I think
Yeah.
we spoke both Nipun and Nilay very nicely talked about how today in today's times CFO and the CFO teams are drowning in data, but essentially we are all starving for insight, right? So not every company will be lucky in terms of having I mean an opportunity to invest in good data science teams, right? So
Sure.
there is data that is flowing through ERPs, CRMs, banking systems, supply chains, so on and so forth. Like what both of them said. But unless we convert this all of this data into actionable intelligence, it's again noise for the most part,
Yeah.
right? So therefore, first and the foremost, it is important, extremely important, to build real-time visibility or the single source of truth. Again, like what Nipun said, across, uh, let's say, for argument's sake, payables and receivables, which becomes a large part of the responsibility. So once these are in place, then whether it is dynamic discounting or supply chain finance are very, very good solutions. I know that for a fact because my parent company Vayana works with a lot of corporates, a lot of MSMEs through these financial institutions in supporting customers with these options, so that capital can be made available to them, right? And so first and the foremost, you need to integrate all of these, the whether it is procurement or finance data or treasury data, so as to have a complete view of both the obligations and the collectibles, and then both these options work very well. From my standpoint, I can give you two examples of how a couple of our customers use this to their advantage. One, where visibility, having the one source or single source of truth help them free up cash flow. We were working, I think, with a mid-sized company, manufacturing company, that actually had both the procurement and their finance teams operating in silos. Now, all that they did was to consolidate the payable and the receivable data into a single dashboard. And the CFO and team discovered that they were actually paying their suppliers earlier than what their terms required. So
Oh,
just by aligning the payments closer to the due dates, they were able to free up nearly about, I think, about 15 to 20 odd crores of working capital in one quarter without having to borrow a single rupee, right? Likewise, there was another customer that very nicely used dynamic discounting. It was an FMCG customer where they had surplus cash, and they subscribed to they implemented a dynamic discounting program for their key suppliers to begin with, and within 6 months they were able to bring down their cost of goods by nearly 2%. And so this not only improved the overall supplier satisfaction, but also made their entire supply chain extremely resilient, and which was a significant win, especially during those times of volatility. So this is how data combined. I mean, when you have all the data points together, then these options that are seamlessly available to be deployed today comes in extremely handy from an overall management standpoint.
sure. I think time for our next poll question, and then we will head to Nipun and Nilay. So, if you could gain one predictive insight from your company's data tomorrow, what would you prioritize? Very interesting, overarching question.
Seema, we kind of answered this question in our first poll, if you ask.
Yeah.
Yeah, but slightly different after hearing all these conversations.
But let the answer comes in. Let's see.
Yeah. No, again, very interesting. It's also about prioritization. And like
Yeah,
you said, Nipun, that, organizations in different sectors, I think customer demand trends critical. But other than that, the ones, that are given below, it will not actually shift depending on the
no,
sectors
all
that
of
you,
them are equally important. It is
Yeah, yeah.
dependent
yeah,
whom you weigh more. It's
correct,
really
correct.
impressive to
So
see
about
the list
53% have
given.
said customer demand trends.
You can't
About
see
20,
unless it's
oh,
on
I will
screen.
just share the results. Yeah. Yes, so about 53% say customer demand trends, 24% market pricing, margin shifts. Again, I don't think anybody is clicking on employee turnover risks.
Yeah, but maybe when they grow senior, so they understand more importance of the employee or retaining a key resource. Because if you
Right.
ask me honestly, since we are on that topic,
Hmm.
the employee turnover risk is so high that if you pick up a new employee as a replacement, one, your business goes down, and sometimes the replacement cost is 1.5 times, and the disruption
Mm,
is almost 6 months. It's not that
absolutely.
easy. So there has to be some retention around good, at least the good so-called the
Mm,
high-performing employees within the system.
right, right. I would
So I
also
agree because
eh,
I think customer demand trend you have to keep track every moment because
mm,
customer is the king and he is the like final user of everything. But then
mm,
also again I will stick to my thing only that employee is the most important, who is the front face, who deal with customers, who understand what are the
mm,
customer demands, how it changes, how you resonate with their requirement, what changes you have to make. So it's like key employees definitely you have to work, but you have to be in touch with all the factors. All the factors are very important, including customer, because customer, if 60-70% your customer should be fixed and you should be knowing what latest trend is developing. And in textile is
mm,
very fashion oriented industry, so you be in the market for a longer period to understand what are the, because if your inventory is built up and that trend or fashion has gone, then you are built
mm.
up with inventory, and that inventory liquidation is like almost like 30-40% of the price you can get. So
Yeah, absolutely.
definitely customer is important, but employee again, I say because he's the only person who can tell us. He's the front face for
Yeah,
any organization.
that's the point.
Aren't we actually seeing a change in thinking, basis what Nipun and Nilay said? I mean, which is incredible because earlier I've seen CFOs used to largely wear the hat of being into largely into risk mitigation, right?
Mm,
Essentially making sure that, yeah, cash and the other things are priority, but at the same time, risk, I wouldn't say averse, but mitigate the risk in a way that yeah, you end up taking the optimum decisions for the company, right?
mm,
From worrying, instead of worrying about supplier disruptions or risks as a result, you're more focused on being sure about customer demand trends so that your overall business goes up. Is, I think, a significant change in mindset that we are seeing these days, because it's all about business. I mean, at the end of the day, if you're able to grow your business and grow it well by mitigating the risk, I think you are addressing multiple objectives of both ensuring growth for your company at the same time doing it right so that you've mitigated risk for the most part.
sure.
No, Mohan, you
Um,
picked it up right. Just a second, Seema.
yeah.
These days, this role of CFO, and we discussed in one of the other forums the other day as
Mm,
well, is more of the business manager. He's no longer
Exactly.
custodian of the finance numbers, audits. Gone are those days.
Yeah,
So
yeah.
CFO, there are a lot of examples where CFOs have gone and become the CEOs. You
Yes.
one
yeah.
example. So they're more of a business manager. So they have to develop across. So business takes a priority. It's only not only the financials or
Absolutely.
of the audit,
Absolutely.
etc. Yeah, Seema.
No, I completely agree, Nipun. And what I was going to say is that, while people have highlighted customer demand trends, I think that is significant for every business, whether B2B, B2C, or whatever that is, because, like you rightly said, customer is the king. So if he isn't there, or if the employee isn't there, then I think your business, like there is no business at all, right? So I think
Absolutely.
going back to the fundamentals, another very interesting theme, and I think Nipun, you touched upon it a little bit in your example as well. So we were talking about supply chain disruption and what are the data points that will help you manage your supply chains better. And today we are seeing that resilience is the key, right? Every organization needs to be resilient enough to be able to battle the disruptions. And disruptions are not, initially you would say that a wave of disruption will come in a couple of years into the business. But today it's actually happening every day, because every
Mm.
day you will see either there is a fluctuation in terms of trade, etc., because of everything. And because we are so globally connected, right? Any change that happens around the world also impacts India as a country. So you would see business changes, you will see technological disruptions coming your way, so on and so forth. So, I mean, the underlying theme is that resilience is important for businesses to survive, not just survive, but actually thrive in this environment. So, Nipun, if you had to share a specific example, where data analytics sort of helped you forecast a potential disruption? And I think you had given that example, but you could
No,
just
no,
talk
I'll
a
share
little
a
bit
different
more.
example.
Yeah,
A
yeah.
good question again, but how I put it as a resilience is seeing the disruption early, not
Being
waiting for it
proactive.
to, not waiting for it to knock your door and become a crisis for you to handle. So that's where
Sure.
we step in. And a
Yeah.
very classic example was just post-COVID, and since I'm talking from the telecom point of view,
Hmm.
we saw a shift in the data consumption through our tools. We
Hmm.
saw from the enterprise, it went down to schools, it went to the small
Yeah.
places, it went to the tier B cities, it went to the tier C cities. So what we
Yeah.
did with that data points coming up, rather than investing a new capex, we reduced our bandwidth towards our enterprise customers and just moved that towards the tier 2, tier 3 cities till the point everything became very normal. So what
Hmm.
happened in that whole parlance was, one, we were able to utilize the full bandwidth which we had. Two, we were saved from spending more, or so the capex investment was saved. And three, we were able to maintain our profitability. So there was a business shift because of a certain situation which took place. And because of the data being available with us at the right time, we were able to take right decisions before it could have become crisis that we were not invested into that particular
Hmm.
sector or in a particular tier city by diverting our resources.
Sure.
Second example would be, since we are into the technology company, equipment failure forecasting. We have a
Hmm.
lot of tools which sit into our system, and one classic example was we found that an area which was a little more high humidity region, there were certain failures or a pattern of failures. So the equipment was behaving little erratically. So
Hmm.
we what we did, we saw that in those high humid areas, if this equipment is failing, we started talking to the vendors. We tried to ensure it was more IP6. We, before the customer could churn, or if the customer could come up with any challenge, we started taking the preventive actions. So all of these three, four actions, one, not only helped us create a high customer satisfaction score. Two, we were able to bring that challenge with the vendor. We were able to negotiate well. Three, we were able to improve the product. Third example, if we have the time, is
Sure, absolutely.
customer credit risk. Customer credit risk. Sometimes, there is a customer who's very good and he's been a good paymaster.
Hmm.
But then if you keep an eye on his market news, and there was very, very one classic example, and I will not want to name the customer, it's still a listed company. They suddenly started going down the drain. When I said suddenly started going down the drain, we could experience or read through the articles that their liquidity crises were coming up. So wherein me and my CEOs, we stepped in, we met their top management, and there was a huge receivables which was pending. And we were able to extract that extra pound of flesh before others could do that.
Hmm.
Not that
Interesting.
that customer was bad, but it was a time of a crisis. And now let me tell you, they have actually gone into a bankruptcy. So whatever amount we could have had recovered from them at that point in time, and this happened last December. Let me be very honest with you, December and calendar Q1 of this year. Now we are
Hmm.
also filing a legal AR for them. But these are the data points, resilience points, or these are the practical examples which I could give from my experience of handling things, if that can help anyone.
No, really interesting, Nipun. And, these are some of the data points, like you rightly said, which allow you to preempt before, it turns into a disaster. Nilay, could you give us a few examples as well?
So I think cost has become now, it's like for at least for manufacturing industry, margins are squeezing, cost has become very competitive.
Hmm.
So I will just give an example. When we used to source cotton is a seasonal product and we source it from November to March and then we consume it till September, October. So by the time they consume, it's like always the technicians, we have through data, we identified that 1% is almost like moisture loss. But
Hmm.
when they started actually utilizing those things and actual data, it comes to around 2.5%. Always technicians say with some or other things that because of more moisture, vendor had given us more moisture, so it has gone. So whatever invisible losses are there, we cannot track those losses. So we have put up a completely change in system in that way, wherein we have made an arrangement with the vendor. He opened a warehouse near to our locations. We opened through a dynamic that bank connections, we have produced a customized solutions wherein as and when he will transfer the goods to the warehouse, his overdraft facility will get open. He will take the amount from that thing, and as and when my glow room require at that time, there is like he will weigh the goods and sell it to us. So it's just in time inventory also. So in two way we get impacted. One is like my just in time inventory is there. I have completely eliminated the inventory part wherein I'm using the inventory for 6 months and using it for last 12 months. So as and when I require at that time only I source that inventory. And second is moisture loss completely eliminated, because when you weigh the goods and you use the goods, it is like time lag is only 5 to 10 hours in between. So there's no moisture loss. So all both those things have gone out. So instead of 2% moisture loss, it is 1% only. And whatever invisible losses are there, technicians become more prudent to control those things. One of the example. Second is maybe we can take off Nipun also had said of my debtors, whatever exports we used to do, we always take insurance cover. In domestic also we started taking insurance cover and started taking discounting on all those things. We never know out of India how debtors are performing, even though they are very good brands, but we see a lot of US brands and everything, they have gone bankrupt even though they have so many stores. So ECGC is the thing where we take all the insurance cover and then only supply that as a policy we have put the system. So resilience in that way wherein we can protect our amount also as well as we do the business. So these are some of the steps which we have taken, which had helped our organizations to continue in time of uncertainties.
Sure,
If I may just
absolutely.
come in here, Seema, just a
Yeah, Mohan.
comment here. I mean, to Nilay's point, where so we essentially work with ECGC, where before they underwrite the risk, we do the risk assessment of the overseas counterparty for them, basis which they decide whether to go ahead and execute the policy and also assign on the limits that they can safely extend. In fact, I just had a very interesting, what Nipun mentioned about the credit risk and how they mitigated the credit risk to a great extent. I was reminded of a prospect that we were talking to almost 6 to 8 months back, where we talked about our models and how we work with so many corporates, banks, insurers, financial institutions in helping them mitigate risk. This was an agrochemical company where, when we explained them how we assess and then how we help them take decisions on credit control, etc., they were fascinated with the model and how our early warning signals work, so that they can get periodic alerts, from time to time, so as to, take dynamic decisions. But, and then we also did a few pilots for them where we said that for this particular customer of yours, this is what the risk score is, and it was a high risk, and we in fact told them to not transact business, and if they want to, this is a limit they can safely transact business with. And then we also supported them with the EWS in the next quarter, where the risk score had gone into the next bracket, where the score had worsened. They still, for some reason, didn't sort of work with us then. But then recently, about a couple of weeks back, they came back to us and said that, the case study that we had done for them, where we had said that the risk score had in fact worsened, and we had told them to not extend credit, they ended up losing close to about 25 to 30 lakhs. And today they've got into a system where everything they do, they do it only after they do a proper Rubik's check, and then track it, through the AWS that we provide them every quarter. So that's how these AI tools and machine learning and insights that we derive out of the data, results in informed decision making for them. And through Vayana, of course, we facilitate financing so that the end-to-end objectives get met for the customer. So AI and ML and all of these, the tech tools play a very, very important role as a result.
Right. No, very, very interesting perspective. I think, Mohan, everybody's been talking about AI and leveraging AI for better predictability, for better, streamlining of financial data, so on and so forth. So I think, that is one emerging. Do you think that is one emerging technology or data trend that you are excited about, that will empower CFOs, de-risk supply chains even further, and really
Absolutely.
unlock greater working capital? Yeah.
Absolutely, yes. In fact, AI-driven predictive intelligence is going to be the future. When you have so many, in fact, for us, we look at 150 sources, almost 1,000 plus data
Mm,
points, whether it's a large size company or a small company. For smaller companies where there is not enough or the financial data is not in public domain, we look at predictive modeling. We build benchmark financials, which along with the other data points is what we use to analyze that particular company, and then
mm,
EWS, so on and so forth. So all of this will not happen unless there is a strong, technology that supports it, and AI that sort of governs the entire process behind it. We've been doing that for quite some time now, and we've got great feedback from our customers, whether it's corporates or banks of financial institutions, and how it is helping them take quick decisions. Today, everybody wants to decide almost immediately, right? So without
mm,
technology and without AI supporting your assessment process, it's virtually impossible to do that. So that is only going to improve, right? Where the predictability and the overall basically the overall predictability of the models that we put together, supported by periodic back testing, is what is going to drive decision making going forward. So that is a big important trend. Second, I think it's also to do with in many ways convergence of data networks, right? So I think the shift will be with respect to ending silos, and again, high-end technology platforms like Vayana combined with Rubik's risk intelligence ends up creating, like Nipun said, the single source of truth, where
mm.
procurement, your logistics, compliance, finance data, all of them flow together. It's
Sure.
important to reduce the friction, right, for lenders, and that will allow CFOs like Nilay and Nipun to also unlock more working capital from the same supply chain footprint. So these two, in my view, is going to be one of the
Game
significant
changers.
emerging trends that we'll get to witness.
Sure. I think that's very interesting, and that's all that we have time for. But great insights, Nipun, Nilay, and Mohan. I think we've been able to sort of complement some of the poll responses as well. So I'm sure the audience has, whatever questions, queries that they had. I think most of it were really covered during the course of the conversation. So once again, really thank all three of you for your wonderful inputs and insights into this conversation, and a big thank you to our participants as well for hearing in, sharing your insights through the poll questions, etc. So with that, we will come to a wrap of this discussion, and thank you all once again.
Thank you.
Thanks,
Thank you,
everyone.
Seema.
Thanks, Seema.
Thank
Thanks, Nipun. Thanks,
Bye.
Nilay.
Bye.
Thanks, Mohan.